Good morning, my dear students. And today we are going to take up very important topic of financial statement, where we'll be learning about the calculation of cost of goods sold. Okay, so in this topic, what you have to see is that how the cost of goods sold is calculated. So, what is cost of goods sold actually? Cost of goods sold means whatever amount of goods that we have sold. ठीक है, दुकान ने जो सामान बेचा है, ठीक है, what was the cost price of that? We all are aware of two types of price that may prevail, that may be in related to goods. One is the cost price and the other one is selling price. So what is the cost of the goods that we have sold? How to find it out? Okay, that is the thing we are going to learn here. Okay, so how the calculation of cost of goods sold is done, you'll see here. ठीक है, देखो, कॉस्ट ऑफ गुड सोल्ड का मतलब क्या होता है कि जो सामान हम लोगों ने बेचा है उसका ओरिजिनल वैल्यू या कॉस्ट कितना था. दिस इज वेरी important because of the reason that with the help of that only you will be able to identify how much amount of money you are generating as profit. Okay, that is very important. So कॉस्ट क्या है, प्रॉफिट क्या है, उससे रिलेशन में पता चलता है. इसी के लिए कॉस्ट ऑफ गुड सोल्ड का जानना बहुत जरूरी होता है. सो लेट्स सी व्हाट इज गिवन. कॉस्ट ऑफ गुड सोल्ड इक्वल्स टू ओपनिंग स्टॉक, जो हमारे पास पहले से है, the stock that we have from the beginning. In case if we don't have, that's fine, there's no problem in that case. Okay, then plus purchases, whatever goods we have purchased during this period, it can be year, it can be month. Okay, so that will be added. So we have got total goods, opening stock plus purchases, the total goods we have got, plus direct expenses, whatever expenses we are making to manufacture the goods. In previous videos, I have told you about the concept of direct expenses. Direct expenses refers to all those expenses which are directly related to production activity or manufacturing activity, right? So that will be added because that is going to increase the cost of the goods. So what we have got, opening stock plus purchases plus direct expenses. Now from there, the goods that has not been sold, okay, that is closing stock, or you can say the unsold goods that we are going to deduct, because that will be taken again as a opening stock of next year. Yeah, so that will be taken as an expense of next year, not this year. Why? Because it is not sold this year, right? So that will be deducted, and once we deduct the closing stock, we get it what it is, cost of goods sold. So very simple. Cost of goods sold equals to opening stock plus purchases plus direct expenses minus closing stock, right? Now coming to the example, let's take sum. Here we have got a sum. What is that? From the following information, prepare a trading account for the year ending 31st of March 2009. The information has been given like this. Opening stock was 40,000. Purchases were 4,20,000. Expenses on purchase, that is direct expenses. How much? 8,000. Expenses on sales, 15,000. So expenses on purchase is a direct expense, but expenses on sale is an indirect expense. Okay, it is an item of profit and loss, not trading account. So it will not be coming in the trading account. Then wages, 30,000, again a direct expense. Sales were 6 lakh, and closing stock was 52,000. Also calculate cost of goods sold and gross profit on the basis of cost of goods sold. So here what is told here, we have to calculate cost of goods sold and the gross profit, and the gross profit should be based on cost of goods sold. ठीक है, जो सामान बेचा उसके कंपैरिजन में कितना हम लोग का प्रॉफिट हुआ है, right? That is very simple. So first of all, we'll go for preparing the trading account, as we have already learned before, so that we are quite aware, we are all aware of that. So first of all, we have opening stock of 40,000 that will go in the debit side, right? Purchases of 4,20,000, it will also go in the debit side. Expenses on purchases 8,000, that will also go in the trading account debit side. Expenses on sales will go in profit and loss, so it will not come in the trading account. Wages of 30,000 will come in the trading account debit side. Sales of 6 lakh. Sales of 6 lakh will go in the credit side of the trading account, and closing stock of 52,000 will also go in the trading account credit side. Here we have placed it. Opening stock 40,000, purchases 4,20,000, expenses on purchase 8,000, wages 30,000, and in the credit side we have by sales 6 lakh and by closing stock 52,000. Clear? So simply by balancing we can get that the total is 6,52,000. Higher total will take in the both sides. Since the credit side is more, okay, since the credit side of the trading account is more, so it is a gross profit. What is the gross profit? After deducting, you can see the total from credit side. From there, we are deducting the debit side total, and we are getting a balance of 1,54,000 rupees. So this 1,54,000 rupees is nothing but gross profit that will be transferred to profit and loss account. Clear? So we have got the gross profit, that is 1,54,000. Now, what is our work? Our work is to find out what is the cost of goods sold. The second purpose. So how to find out the cost of goods sold? Now we have seen in the formula just now that the cost of goods sold requires four items. What is that? Opening stock, purchases, direct expenses, and closing stock. All are available in this question. So that's not a problem. Opening stock is 40,000, right? Plus purchases refers to how much? 4,20,000. Expenses, that is the direct expenses. What are the direct expenses here? Expenses on purchase 8,000. Wages 30,000. Okay, so 40,000 plus 4,20,000 plus 8,000 plus 30,000 of wages, and what we are going to deduct? Closing stock of 52,000. So let's see, here it is. Cost of goods sold equals to opening stock plus purchases plus the direct expenses, that is expenses on purchase plus wages. Okay, expenses on purchase and wages were the expenses on purchases and wages were the direct expenses, right? So that will be added here, and at last minus the closing stock. Okay, now what you are going to do that after this, just to make the calculation. Opening stock were 40,000 plus 4,20,000 were the purchases, 8,000 were expenses on purchases plus wages were 30,000 minus the closing stock of 52,000. The answer comes at 4,46,000. Okay, the answer comes to 4,46,000. Clear? This is the cost of goods sold, right? Now let's find out the gross profit from this also. Okay, we have already found out the gross profit. We have already seen the gross profit in the trading account. Now using the cost of goods sold also we are asked to find out the gross profit. Here you can see in the question, also calculate the cost of goods sold and gross profit on the basis of cost of goods sold. So using the cost of goods sold also we have to find out the gross profit. So how can we do that? Very simple. Sales minus cost of goods sold will be the ग्रॉस प्रॉफिट, है कि नहीं? कॉस्ट ऑफ गुड्स सोल्ड का मतलब क्या है? जो सामान मैंने बेचा उसका दाम कितना था, ठीक है? मैंने पकड़ लो एक पेन बनाया है, पेन का दाम 8 रुपीज है, मैंने उसको सेल किया 10 रुपीज में, सेलिंग प्राइस, ठीक है? तो प्रॉफिट कितना हुआ? 10 माइनस 8, 2 रुपीज, वही है यहाँ पे, दैट इज ग्रॉस प्रॉफिट विल बी 2 रुपीज. क्लियर? तो ग्रॉस प्रॉफिट मींस व्हाट? सेलिंग प्राइस, दैट इज द सेल्स, माइनस द कॉस्ट प्राइस, दैट इज द कॉस्ट ऑफ गुड्स सोल्ड, that is 6 lakh minus 4,46,000. How come we have got 6 lakh? In the question we can see sales were given 6 lakh. So 6 lakh minus the cost of goods sold that we calculated just now, 4,46,000. We are getting 1,54,000. This is nothing but gross profit. Clear? Now, along with that, you can see that an important note has been put up here, which I was already uh, putting or narrating it earlier. That is, expense on sale will not be considered in the trading account because it is an indirect expense. It will go in the profit and loss account. Here, now let's take up another question. Just come in Delhi Board 2014. What is here? Ascertain cost of goods sold from the following. Here the information has been given, and we have to ascertain the cost of goods sold. So first one, indirect expenses. So we know that there is no place for indirect expense in the cost of goods sold. So ignore it. First, the next one is direct expenses, 18,600. It will be added. Sales, 1,20,000. Net purchases. Net purchase means purchase less return. Okay, return, whatever purchase return will be there. After deducting that, they get the net purchase. So purchase less return is called net purchase. It is 72,000. Return inward is We have already got the net purchases, right? So if we get the net purchase, no need to take a return inward again or return outward again. Just a, for a mm, uh, just for a refreshing the old classes. Let me tell you, return inward refers to sales return and return outward refers to purchase return. Okay, so return inward will not come with the purchases. Return inward will come with the sales, because here it is not net. The sales is given as a total 1,20,000. It is not a net sales. अगर ये net sales होता, if it was a net sale, you would have not considered return inward. But here you will have to deduct this return inward of 12,000 from 1,20,000 rupees, because of the reason that it is the total sales and return inward of 12,000 is included in that. It will be only considered if we take um, the if we take the total amount, that is sales minus cost of goods sold, to find out gross profit. Okay, at the time of that, if we find a gross profit, that is gross profit equals to sales minus cost of goods sold. If we use that formula, then you have to take the sales. Otherwise, sales is not required in finding out cost of goods sold, isn't it? Then coming to the next one, return outward. Return outward means purchase return. Since purchases has already been given net purchases, so don't touch the return outward now, because it has already been adjusted from the purchases. Okay, it will not be deducted. Then coming to the next one, closing inventory. Inventory means stock. Okay, so closing stock and closing inventory is a synonymous word. So closing inventory were 28,000. It will be deducted while calculating cost of goods sold. And opening inventory was 16,000. It will be added at a time of finding out the cost of goods sold. So simply use the formula cost of goods sold equals to opening stock plus purchases, right, plus direct expenses minus closing stock. Yeah, minus closing stock. So what we are getting here, what is the opening stock? Opening stock was 16,000, right, plus net purchase 72,000 plus direct expenses 18,600 less the closing inventory. Closing inventory was 28,000, so it comes to 78,600 rupees. Okay, here they have not put the formula in a sequence wise, doesn't matter. Okay, the answer will be the same. So it is coming 78,600 rupees. Clear? Now from here you can find out the gross profit also. Again, the question it is not given, but if you want, you can find out the gross profit also. How can you do that? It's very simple. Gross profit equals to sales minus cost of goods sold. Now sales were how much? 1,20,000, and sales return was how much? 12,000. So 1,20,000 minus 12,000, the net sales is how much? 1,08,000. So 1,08,000 minus 78,600 will be the gross profit. Okay, will be the gross profit. So it is coming 29,400 rupees. So that will be the gross profit. Okay, so that you can solve in your copy. That's no problem. An important note is that here in this case, what happened that since net purchases are given, it means that return outward has already been deducted. So you are not to take into account return outward. Okay, and again another thing is that return indirect expenses will not be considered in the calculation of cost of goods sold. That I have already told you, that is a item of profit and loss, not trading account, right? So that is not a direct expenses. It will not come in the calculation of cost of goods sold, right? I hope all of you have understood this point very nicely. In another video, I'll explain a little bit more about these all concepts, okay, regarding the cost of goods sold and how to calculate gross profit using different type of questions. Okay, till then, please practice all these things and do take care of yourself. And please make the note of business studies. Once the offline classes starts, in between, very soon we are going to take the offline classes. So at the time we will be uh, discussing those questions and solutions very nicely. Okay, these all things, please make a proper note. Business studies will be discussing properly in the classes also. Okay, till then, please take care of yourself, take care of your parents and guardians also, and take care of your studies. Okay, till then, bye bye.